All right, welcome back for the episode of Carnivore Trades. Today is Thursday, June 29th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So markets here, little mixed. We have the Dow, Russell, and spiders up higher with the triple Qs down about 1/3% here. So a little bit of a change from what we're used to lately. Obviously, it's been the QQQ show today. Russell kind of leading here. So Russell is up 1.25%. A lot of that coming off the back of the KRE. We've talked about that a lot lately. When the KRE is up, it's generally going to mean the Russell's up, especially when the KRE is up big, and it's up almost 2%. Why is it up? Well, we got the stress test last night, which let's be honest, they weren't really stress tests, but they call them that. And so it's just kind of like a free bid for the market. So you're seeing JPM up nicely, XLF up 1.6, Goldman up 3%. So nice moves here for some of these financials here. Citigroup up 1/4%, a little bit on the weaker side. Wells Fargo with a nice pop. So financials getting a bit. XBD broker dealers getting a nice pop as well. Nothing's really changed here on the weekly. Still kind of on the weaker side. But again, you're seeing the Russell kind of bid up. There is some gamma at the 4,400 strike on the SPX. So that may be a little bit of a target here. And right now, a decent consolidation pattern here on the hourly and kind of like the 30-minute sort of intraday time frame. So we can get a little bit of a pop here as we go into the end of the day. It is notable that VIXY is green today, so something a little bit out of character there. And it's not like it's OPEX week. You see the VIX there up 1.5. But really the big story for me today is yields. So we got the jobless claims today, and that came out much, it's much better than expected. Depends on what your definition of better is. Better for the economy or better for stocks? There was less jobless claims, let's say that, and that is at odds with what we've seen the last 3 weeks, where we had like 260,000 plus. That was about expected today, and we had like 230,000. So it's essentially signaling that inflation's not done with. We look at the 10-year there, 3.88 or up 3.88%. To 3.854. Let's look over at the 2-year, all important. What I've been saying here for months now, this is going to head towards 5%. 4.88, that's basically at the highs of the day right now, and that's getting a bid. Why is this important? Well, the market doesn't care right now. Again, we're going into a holiday weekend, so it can hold up. But if this gets above 5%, and I'll just show you right here, here's your effective Fed funds rate, right around that area, 5 to 5.25. If it gets above that, the whole narrative that inflation's defeated and the Fed can back off and start cutting rates will go away. In fact, Fed funds futures now pricing in, not pricing in cuts until May of 2024, as opposed to just yesterday, they were pricing it in January of next year. So again, we've been talking about this. Inflation goes in cycles just like everything else, and 2 years getting a bid. So next stop for this is 5%. You have a little bit of a pivot right there, basically right where we are, 4.8. 4.88, 4.9, a little bit of area. So, but I mean, you've got a nice little coil here, and you popped up. We've been mentioning this. I've mentioned this every single day on here. Look at the weekly. Let's use the 10-year. Nice inside bar, a nice little pop. 30-year inside bar, pull back and a pop. So again, through 4%, 4.2. 10-year through 3.8, it's up to 4. Fives, you get through the fives already through this area, but next stop is 4.25. We're looking at weekly here. So right in this area, 4.25, 4.35. So again, 1 month, 3 month, and I think I don't have a chart of the 1 year here, but I just read let me just pull this up. The 1 year yield is now higher than the S&P 500 earnings yield, and it hasn't been like that since the year 2000. So a lot going on here. Again, it's not a big deal until that Fed funds rate gets eclipsed by the 2-year yield. Right now, the market can hold up. I mention this every single day here. When did the market turn around? In March 13th, you see it right there. And you look at when there you go. You can see it right there. March 13th on the spiders. Then we get back over here to the 2-year. That's when it started to break down, and it got back below the Fed funds rate. So that's where, if you want to look for more of a real sell-off instead of just a pullback, that's probably where it's going to be. If and when that happens, I do expect it to happen. Again, inflation, I don't think is going anywhere for a while. But we're seeing cyclical kind of deflationary or disinflationary periods. By the way, now after June, It's going to be a lot harder to beat those CPI numbers to the downside because June was 9.1%. That's when it peaked out. Next month, it's going to be a lot harder for us to get those big declines in CPI. So just something to keep an eye on there. But spiders here, short term, holding up. Again, going into a holiday weekend. Look at the volume. Who cares, right? You know, not even 50 million shares. We're holding up just fine here intraday. Interesting to see the Qs kind of back off and the Russell outperform there. But again, a lot of that is due to the banks. It's not like the Qs are down that much. I mean, Apple and, you know, all those names are basically flat here. Apple's flat to positive. Tesla's flat to negative. Nvidia's down a little bit, but nothing crazy, right? Semis are under a little bit of pressure here, but anyways, let's get into it here. So again, short-term resistance 438 on the SPY, 4400, of course, psychological level, and then you got a gap fill on the SPX there. Triple Qs, nothing terrible. Again, still can't get above that 365 handle, but no problems here with this pattern. It's still just hanging in there just fine. If you put it in a lower high and take out this low, then it's just, you know, down to this trend line here. So simple. Keep it simple, stupid for right now. Russell, again, getting a bid up about 1.25, coming off the highs just a little bit. You went into some, you know, pivot. This red bar here, you had a flag. It started to break down, so that's where it's pulling back from. But this can still get to 192, so just be aware of that. Dow getting a nice bid, too. That can probably get back up to that 343 area. Semiconductors here, down 36 basis points. Nothing terrible, still inside of that pop from the 27th. So no real issues there, but it could still go down and test 144 again. But again, it's still holding up okay, so we'll leave it at that. I will say that I mentioned this yesterday. AMD, some of these are starting to look a little bit soft. Like that could be a, you know, daily chart bear flag. Nvidia, trend is up nicely, but you're inside of that red bar and you're going sideways. So you break 400, it's going to get back down to 380. So just some short-term levels to look at there from those leading semis. IGV here basically flat, no problem. Same thing goes for the triple Qs, right? So if you start to make a lower high, you take this out. You know, have to put in a trend line there. You could probably make a case. You got one right here even. So we could look at that maybe moving forward. That's a, you know, that's a pretty steep decline too. But you'll have support at, you know, 322, 320. So, but that could be an area for more of a steeper correction. And again, the spiders too, same thing. If we have a steeper correction, that's where it's going to want to go. But anyways, transports here holding up. That is green again. Remember we said 15.5. There it is. So right into this area here, and it's holding up well and probably wants to go test that area there. I'm not sure if that was a monthly level that I had on there or a daily. Okay, so that was that previous green bar low. This is why I love charts here. Inside bar low broke down. Where did we go in February? Boom, right there. Rejection. Now we're going to test it again. It is getting a little overbought here, so that may not get through that right away. It might have to consolidate, pull back, something of that nature, a little short-term extended here, but nice move for the transport. So we'll look for that to go to 15.6 right now. We'll call it 15.6. But yeah, nice move there. For DJT, that is still holding up well. We already talked about bonds. We can look at the futures there, though. ZT getting walloped. ZN and ZB all lower. HYG, inside day, but still not a great sharp pattern there, all things considered. Just, you know, you've been sideways here for a year, not participating in the stock market rally. XHB holding up. That can still go higher inside of Tuesday's move, so no problems. ITB also an inside move here. There's no issues with that, other than it's very overbought, and valuation-wise, I think, you know, is a problem, but those things can remain like that for a while, as we know. So anyways, VNQ here, gap down and actually rallied back up nicely, so that's holding up okay. Again, you guys know I don't like it on the bigger time frames, but it's hanging in there for now. 84 is still resistance. XLF up 1.6, so that's still having a nice day. Still got a weekly bear flag look, so just be aware of that. Not the best, not in the best of shape here are the financials, even despite KRE having a nice day today. You know, still below those moving averages. I don't like how you close below that green bar. Just not a fan of these patterns here. KBE, same thing. Broker dealers are the best of the bunch, though. Still in an uptrend, and it is starting to firm up a little bit. If you get a close above this red bar, this can go back to 480 and then possibly 490. So broker dealers, definitely the best out of everything right now. All right, over to crude here. So that was up 37 basis points. Nothing crazy going on here. Again, just stuck in this tight range. If you lose this, it's the double bottom. You take out double bottom, it's going to 60 and then probably ultimately down to 50. XLE, getting a nice bid here. That is up 82 basis points. That's actually had a pretty nice day, a little dip in the morning and then getting a nice pop. I just don't like the weekly pattern. So down move and then sideways action. I still think this needs to go have one more corrective move, and then I think it's ready to go. XOP shaping up a little better. It's a nice pop there, 1.6% on the day. Still has that same kind of look though, the down move and then the sideways chop. So I do think this has to have one more corrective move, and then I think it'll put in a pretty good bottom. And OIH, it's almost to our, well, it is above our level now, up 1.7, but we need a weekly close, right? I want a weekly close. You give me a weekly close right here. That gives me, that improves this pattern much better. Problem is you still need a weekly close above 292.82, but right now, just one step at a time, you got a nice little inside bar, pullback, and a pop. So that would be the next level if we can get a weekly close above 280. So OIH, obviously I've been saying this every day, is the best of the bunch in that regard, and it's continuing to prove that right now. Nat gas here, nice recovery after the little dump yesterday, came off the lows. Inventory numbers, got a big pop, like really big pop on the inventory number. Came in better than expected, and now just kind of consolidating their intraday. So again, no problems here. We've really only had 2 pullback days since the first. So, you're talking about a 34% move in like 3-4 weeks. So, not surprising to see a pullback day there, but right back up there. So no problems right now with Natty. Dollar index rallying again, as you'd expect with yields. And again, markets don't care right now, but if you get the 2-year above 5%, that's the tipping point, if you ask me. So, but dollar index holding up well, and take a look at the weekly. This is getting better, right? It's still not above, you got to get above 103.75 on a weekly close to really negate it, but this is better now. So it's getting a little bit of a bid, definitely less bearish on it now, more neutral, but still has a little bit of work to do. But nice pop there for the DXY. Gold here, holding 1900. What's interesting, right? So gold was down big earlier, and it came back, and it's flat to negative, but it's holding up. Dollar up, yields up, gold's up. That's not, it doesn't happen very often, but when it does, can be a sign that something's going on underneath the hood. It's only one day, so we won't make too much out of it. It's also a holiday. We're basically in a holiday weekend, right? So again, can't make too much out of it yet, but something to watch there. But it's holding 1900 for now. We talked about this trend line for a long time. It's there. I'm just not convinced that this is the low for gold. That's all. But anyways, over to silver here. Outside day down, still holding the 200 moving average. That could be setting up daily bearish consolidation for a move to 21. Platinum here, breaking through 920, so into that little double bottom at 900. I think that's got to go a little bit lower here, and then I like it, but not yet. Palladium, same thing, holding that 1200 level from yesterday. Good volume behind that yesterday, but still on the weaker side. Nothing to do with that yet. Copper breaking below 370. You guys know I'm looking for 340, just not in a straight line. All right, over to Bitcoin lastly. So Bitcoin's hanging in there, right? So nice inside bar. I think it's just waiting for that 20 MA to catch up on the daily, and that's where you get a pop to 32.5, maybe 33 even, could overshoot. Bitcoin always does. And again, I like the look of some of these Bitcoin equities right now. And as I've mentioned this, every day, but Marathon, this is a little bit overextended here in the short term. Riot, not a terrible weekly consolidation there. Same thing with MSTR. Even Coin has had a nice rebound here. So some of the Bitcoin equities are kind of confirming this move here. But again, big picture, nothing's changed. Still looking for 32.5. Ether, 2000 is your level there. Anyways, okay, yeah, so it's about 3:30 here. Market's holding up. We might get a little bit of a afternoon bid here. 30-minute consolidation looks pretty good here on the spider. So maybe they close it right at 440. We'll see what we get here tomorrow. But again, big takeaway after the holiday. If yields continue higher, just watch that 5% area. If that's where if the 2-year breaks above that and sustains above that, Fed will have to raise rates. The narrative that pausing will lead to cutting will be completely off the table, and the inflation narrative can come back. So just be aware of that moving forward. Anyways, guys, gonna wrap it up here. You guys take care. Come find me on carnivoretrades.com. Subscribe to the channel. See you guys all tomorrow.